It's time for Operation Freedom with your host, Dr. Dave Janda, on Southeast Michigan's conservative powerhouse, WAAM Talk 1600.
Thanks for tuning in and welcome to WAAM Talk 1600's Operating Theater. It's the only OR in all talk radio. I'm Dr. Dave Janda, broadcasting from our ancillary bunker, linked to our main freedom bunker in the People's Republic of Ann Arbor. We're here every Sunday for you from 2 to 5 Eastern, but it doesn't start and stop on Sundays from 2 to 5 Eastern. We are available at the following locations 24/7. Yes, our YouTube channel continues to survive. We can thank our IT team for that. So far, our AI programs are, let's say, beating the AI program of the social media giants so far. We'll see. But our IT team has been on it 24/7 so that we can get what content we can out on public platforms. We are available on our YouTube channel named Operation Freedom, just like the radio show. We are available on our Rumble channel, also called Operation Freedom. But where the real meat of the matter is at davejanda.com. Both the free, the public side, where we upload information on a regular basis. A good example of that is this week on our subscription platform, we had Dr. Lee Merritt, one of the top physicians, surgeons, researchers in the country. And she has put extensive time, effort, and her research bona fides into the COVID situation and the jab situation. We initially, on April 1st of 2021, did an interview with Dr. Merritt called The Virus, the Jab, and the Data. It went viral. We've now done a follow-up, which we had in our Insider Insight series for our subscribers. Our subscribers felt it was so important, they asked that I release it to the public, which we have done this week. The title of that presentation is called Flu D'état Goes Viral. It is about the updates on the virus and the jab and the data, all of which the bought-off, lamestream, fake media tentacle of the deep states wants suppressed. That interview is on our homepage. It's free. Just go to davejanda.com and go on the left-hand side, and we're there. So we have the public side. We also have the subscription side, extra shows, extra content, archives to all of our shows. Our subscribers will have access to the podcast, not just from this radio show today, every radio show back to the inception of our radio show 10 and a half years ago, all available for a very, very small fee. The biggest bang for the buck in all the internet. I encourage you to become a subscriber to davejanda.com and be a member of our Freedom family. Now, as several of you know, we have been battling a portion of the tech world that called Avast AVG. Starting about a week and a half, almost 2 weeks ago, anytime anyone who had downloaded that software program, Avast, AVAST, or AVG, to their device, anytime someone that had downloaded that program to their device went to our website, they were given an error message. A tremendous number of feedback went from myself, our IT team director, Nick Ruiz, our IT team, to them saying, this is a false positive. You're blocking us. Stop it. It just so happens that someone, principal in the Avast world, got back in touch with our IT director, Nick Ruiz, last night and apologized, said that it was all their fault, that it appears with a system upgrade they did, somehow, imagine this, somehow it was leading to blocking our site. Well, they've apologized, and our site is now free of the Avast AVG suppression or censorship. My suggestion, folks, is needless to say, based on their targeting of our freedom-based website and how Avast AVG handled the situation, I believe their software is not, repeat, not, in my world, to be trusted, used, or downloaded to any device that you or I value. more updates on that as time goes on. The website is secure. And by the way, we spend thousands of dollars every month to ensure the safety and security of our platform. It is my honor to have with me someone who's a very dear friend and someone who is continually ahead of the curve, looking out for your financial and economic freedom and your welfare. TraderStef has been a regular on this platform for a number of years, and it's almost deja vu. The precious metals market, the end part of this week after that goat rodeo of a Fed announcement, it got hit pretty hard. But as Steph says, it's deja vu, because Steph came on this platform in March of 2019 after the precious metals market had been hit. And a number of people at the time were saying, oh, we haven't seen anything like this. And Steph came forward and said, no, stop. This is about AI platforms. This is about high frequency trading. This is about computers. Well, here we go again. It's, as Yogi Berra would say, deja vu all over again with what happened this week. A little background on TraderStef. She had a career spanning 14 years within the New York City investment banking industry. She acquired a diverse skill set in human resourcing, technology, communications, training, education and development, business analysis, and global risk. Steph began investing in precious metals as far back as 1999, while following market trends post-dot-com bubble and 9/11. She then left the banking industry in 2009 after 5 years in global risk management at Citigroup. TraderStef has since developed and hosted a live Precious Hour webinar specializing in gold and silver and the mining equities, combined with research of industry fundamentals, financial markets, global news events, geopolitics, monetary policy. Otherwise, when you meld it all together, known as fusion analysis. She has a phenomenal website, TraderStef, S-T-E-F, TraderStef.com. It is my honor to welcome back TraderStef. Steph, welcome back to the Operation Freedom platform.
Hey, Dr. Janda, how are you?
Doing great. Oh, and by the way, to all the dads out there, happy Father's Day, as my dad used to say. Every man, woman, and child, whenever on Father's Day, he walked by anybody, woman, man, and wish him a happy Father's Day, and everybody, I'd be like, Dad, he just said Happy Father's Day to a kid. He just said Happy Father's Day to a woman. And he'd say, Dave, the key with being a father is caring more about others than you do yourself.
Right.
Every person on the planet.
Dad, rest in peace, Dad. I love you.
Yep, that's right. So, Steph, let's focus on price derangement syndrome, deja vu, because again, back in March of 2019, when you came on this platform, we were at a very similar time. Am I off?
Yeah, around the same time. But, we don't have much time to get into everything we need to get through. So I want everyone to know that later tonight probably, this is all going to be posted with the charts and the information at TraderStef.com. So if we don't get through it all, don't worry. You can go, check it out later. And it's better if you do it that way anyway. So, but before we delve into that world of the paper sandboxes, it's like a deja vu. I want to emphasize something to everybody. And that's that fundamentals, like supply and demand, eventually win in the end. But, how much pain are you willing to endure in the process if you don't, as my dad used to say, adapt, overcome, and improvise your investment strategies with technical indicators that the automated trading algos feed upon in the paper markets? And that sandbox is really difficult to play in. Don't have anyone try to convince you otherwise. And the physical bullion side of this playground is currently wrought with supply chain issues, and hefty premiums must be paid if you can find the physical of what you're looking for. So one example is today, the 1 ounce proof American Eagle gold coin is $2,750 per ounce at the United States Mint. The paper market closed at $1,765 on Friday. A silver 1 ounce bright uncirculated American Silver Eagle, $45 retail. Silver spot paper price closed around $26 on Friday. So we got a serious price bifurcation occurring in the market between real physical in your hand, and paper fugazi that's filled with numerous levels of counterparty risk. So, yeah, it's like price derangement syndrome all over again. And the manipulation meme is back in fashion, and it dragged a whole bunch of diehard precious metal folks down into the rabbit hole with emotional breakdowns of social media. It was hard to watch. And look, I'm going to refrain from offering counseling, but I want to repeat to anyone that still has blinders on, and you've had enough of the fundamental cases and the conspiratorium nonsense, and you want to get real. You know, Peter Toogood laid this out back in December of 2019 as far as, you know, the paper reality versus the fundamental reality. So that's going to be on the website. But, you know, the market does not even know you exist, and you can't do anything to influence it. And the only thing you can do is, like, control your behavior. So when news headlines are generated by the prostitutes in the financial press that immediately followed, you know, that FOMC announcement on Wednesday, they were largely responsible for misrepresenting what the Fed actually communicated. And part of that equation is what we talked about in our last interview, you know, the inflation, deflation, disinflation rabbit hole. That will be linked in the article too. But the machines took the paper caper, you know, like they're going to stop printing money. And after reading the legacy media headlines that were duplicated on social media platforms, it exhausted numerous technical support areas on the charts that were filled with automated stops that cascaded across several time zones. So if you think there's any imaginary speed bumps that are going to save you in this global matrix that's littered with mindless millisecond hellfire, it ain't going to happen. And the Fed has already gotten out there because they're trying to mop up this week's swoon in the markets by sending Kashkari out there from the Fed late on Friday saying basically the opposite of everything that you've heard in the media and one other Federal Reserve person. So, look, I'm old enough to remember when precious metal pundits actually believed that converting the London fix to an electronic bidding system was going to create some kind of miracle back in 2013 and 14. And I also remember when open cry trading pits, you know, like the movie Trading Places,
right,
were the norm. You know, that was reality. And investors knew that the futures markets are a hedge and not a delivery mechanism. So, you know, the market veterans are just mourning how the open cry pits are just being closed one after another. And there'll be a chart that's going to clearly point that out for you in an article over on Financial Times. But, you know, the monkey hammer Muppets are getting monkey hammered. And just like the global warming meme converted to climate change, you know, it's really changed. And if folks don't really connect with what this paper market really is, you're wasting a lot of brain cells and energy and emotions getting all worried about it and believing everything that you're hearing that's written about in both the mainstream financial press and the alternative media. You really got to settle down and take a look at what's happening. And, you know, a primary example is look at the difference between that paper price in the market and what you're going to have to pay for at retail if you can find what you're looking for right now.
And that's the key, Steph. As you said, the differential between the paper market and which is driven by algorithms and high frequency trading and AI and the physical market, because that's where people really should be looking at.
Yeah, it eliminates your counterparty risk.
Right.
You know, it's no different than, you know, people were talking crypto and it's like it's Fugazi. It's nothing. It doesn't even exist. You don't own it. It's like, show me a Bitcoin. Okay? It's not going to happen.
So, Steph, one of the issues that's being discussed is this BASELIII situation that really the big boys have been working on for a decade, but everybody has this June 28th kickoff date for BASELIII. But tell me if I'm wrong, but the big shooters in the industry, the bullion banks and the like, they've been positioning themselves for this for the past 10 years. Educate our listeners on Basel III and your take.
Yeah, I'm not going to get into the nitty-gritty of what Basel III does, but they hammered out the draft back in 2010, immediately after the great financial crisis. And it's been implemented intermittently since that time, and it's going to take several years for it to be totally implemented. But, the central banks were involved in those draft talks back in 2009 and 2010. So the talk now is there's this date this, month it's going to impact the gold market. Well, we got summer seasonality coming up and so many other factors. You really can't for sure say it'll have anything to do with it. But from my experience and what I know, I don't think it's going to have any impact whatsoever, because the bottom line is that gold is now considered a tier 1 asset on central bank balance sheets instead of a tier 3. And what that means is a tier 3 asset, when gold was only valued at 50% of its market price, when you're at a tier 1 qualification, it makes gold a loan backing reserve at 100% of its market price, which is the same as cash and like sovereign bonds on their books. So, this has been going on for a long time, and this June is not really a special date. I'm sorry. And when you actually look at the information, it's no coincidence that the central banks began buying physical gold for their vaults hand over fist. Forget the whole unallocated, argument. Just look at what they're doing and what they've been doing for the past 10 years. It's not a coincidence. And, by the way, the In Gold We Trust team, they actually included a nice chart that actually lays that out for you and shows you what's happened. And today, the official gold reserves held by central banks, we're not just talking United States, but it's only 9% below the all-time high that it was back in 1966. Because they used to be selling it.
So, Steph, when you look, you are a technician extraordinaire. You can look at charts, in particular precious metals, gold and silver, in sub-particular, and you give an incredible dissection of what lies ahead. When you look at the gold and silver charts, what do you believe lies ahead?
Well, if the seasonality patterns for gold and silver hold true, they didn't last fall, but they did last summer. And they did briefly in December, but then, we got this consolidation because of this run-up that we had, and the consolidation has been going on. And it looked like we had a breakout, which it was last month and earlier this month. But, this whole FOMC thing, just, it put a fork in the pig, so to speak. But when you look at the futures seasonality right now, we're approaching that bottom that you generally see sometime in June before you get a lift-off later during the summer. Now, the other factor is when you compare the futures market to the commitment of traders, lots of times there is an association made with that, there's too many shorts versus longs. And actually, when you look at the data, there wasn't any really major shift in that data running up to the FOMC meeting. So it just adds more credence to the argument that what you really saw was just automated mayhem, just not based on fundamentals whatsoever. And don't forget, that U.S. dollar, more often than not, what you get is an inverse correlation, particularly when the moves are very strong. The dollar spiked a couple of full basis points after that FOMC meeting. So gold and silver got hit. Now, when I did the last analysis on May 31st, it was like all systems were go. We had a golden cross. We got through a Swiss stare. But that Swiss stare that's mentioned in the analysis, that was like pretty much not 100%, but there was a lot of institutional money that was layering in core positions that were foreseeing a nice move probably coming in the summertime as well, based on everything that was going on in the world. Well, that actually added to the swoon of what happened this week, because then when it hit those stops going through those levels, there were big blocks that were just automatically liquidated. You know, it's nothing but paper. They're not selling any physical gold. It's just a paper market. Don't forget that. But you got to be careful right now if you're playing in the paper market. And I always emphasize for several months that you really needed to wait until that 1980 level was taken out with some conviction before putting any major capital at risk. And I'm glad I put that out there because, you know, we got up to around the 1920 area several times, and that's right around the area where we rolled over this time. So be cautious until we get a sustained reversal and a bullish pattern develops on the gold chart. And for silver, it didn't get hit as bad as gold. And there's still a major pattern that is intact, and there weren't any major violations with trend lines. It just broke through a few moving averages. So I also emphasize that 29 and 30 was a really big deal. And we never got through that. We got up, you know, in place somewhere between 28 and 29, but it never really got up there to take that out. And I emphasize not to put a lot of capital at risk until we got something decisive happening out of 29 and 30, because then it's kind of like all systems go. You could be running to 40 and 50 really quick. It could be amazing because there's not much resistance in that $20 range once you get beyond that. So it's the same thing. I'll say you need to be careful and trade with caution until a sustained reversal is evident in the silver trade. And don't be a bottom picker and a top picker because they generally become cotton pickers.
And Steph, these AI programs and high frequency trading programs, they obviously can push it hard to the downside. But once we break these levels that you spoke about, can these same AI high frequency trading programs lead to a moonshot, something higher than any of us anticipate?
Yeah, we see it in both directions all the time. You know, that's kind of old news, but everyone has to keep in mind that the global interconnected financial network is extremely complex. And for one individual or one institution that think that they can actually impact the whole globe in a significant way at a specific point in time, you know, good luck with that. You're working against a lot of other algorithms that are probably doing the complete opposite of what you're thinking. Because there's always two sides of the trade. You know, there's a buyer and there's a seller, because if you don't have both sides, you don't have a market. Remember the flash crash back in 2010? A lot of the hedge funds just flipped the switch on their algorithms and their high-frequency trading machines, and there was nothing in the market. It just kind of ended. So, you know.
Steph, I'd like to thank you for everything you have done, are doing, and will do. TraderStef.com, folks. TraderStef, STEF.com. Steph will have the articles, the analysis, up and loaded for you by this evening on her website, TraderStef.com. Folks, you're listening to Operation Freedom. Dr. Dave Janda broadcasting from our ancillary bunker, link to our main Freedom Bunker in the People's Republic of Anarchy.